Yeah, morning, Trace. A very lively start to the day across the metals complex. This is a scene that is red hot. Are people chasing the move? I mean, certainly there's really strong momentum across the scene at the moment. I certainly think you're seeing signs of FOMO chase playing through in silver and copper. I don't necessarily think you've got that in gold at the moment. Now, I guess on one development, you did see $400 million of inflows into the GLD on Friday. That's the fourth highest amount since over the last 12 months. So we'll see if we can see further inflows playing through in the GLD, which could potentially be a new kicker for the gold price going forward. But I guess if you have a look at futures volumes on Friday, they were pretty much in line with the 15-day average. If you look in the options market, 1 week calls in gold are trading about 1.03 vols richer than what we're seeing in puts, which is not particularly extended. If we're trading 3 vols richer in calls to puts, then I would say that we're clearly, market is getting a bit exuberant and signs of real chasing playing through, but we're not seeing that yet. So futures volumes, the optionality side of things is suggesting that there could be more to come. Now, obviously, what we're seeing across the whole metals complex is strength. I mean, we saw that on Friday where gold price was up 1.6% despite 10-year real rates up 3 basis points. Even more so in silver, which was up 6.5%. We're seeing silver at the moment trading above $32. But silver had the best week last week since February 2013. Platinum was up 8.8%. And what we're seeing today is record levels playing through in LME copper and CME copper trading at $5.15 a pound at the moment. Obviously, there's a big focus on whether or not the arb between the two can close as we go forward. But certainly, if we have a look at what's happening in terms of the move in gold, the question is whether or not we can close today above the all-time intraday high of 2,431.47, which we got on the 12th of April. Now, we've opened up and we've traded up to a high today of 2,440.59. We pulled back a little bit from that point. We're seeing a big move up again from 1% in Shanghai gold, but certainly the question of the day is whether or not we can close in spot gold above 2,431.47. If we can, and we can kick higher from that point, then I think we're going to see much more FOMO money coming into the gold market, not just in silver and copper, but people actually chasing the gold price further from this point at the moment. We are seeing gold rallying in all currency terms, so that's something we're watching very closely. Now, what is actually driving gold is the question that a lot of people are asking at the moment. I'm not sure you can really make a convincing argument it's anything to do with the dollar or real rates at the moment. As I say, on Friday, the gold price was up, so was real rates. I think what you've got to do is you've got to have a look at some of the other factors which are more slower moving and therefore hard to trade from a fundamental perspective. If you have a look at China's gold holdings relative to its reserve, there's a very strong correlation with the gold price at the moment. We're seeing big central bank buying, certainly on the EM side of things. People are saying they're buying gold as a hedge against ballooning government deficits, maybe some geopolitical issues playing through. Some on the data side, since April, we've seen US data continuously miss the mark. You've seen that in the Citigroup Economic Surprise Index, which is trading negative, the most negative it has done for some time. Obviously, a slight moderation in inflation probably helping the gold market to an extent there as well. But certainly, a lot of these factors point towards what we're seeing in terms of China holdings from government, but also from retail buying at the moment. So it makes life very difficult to trade this from a fundamental perspective, which means be a slave to price action, react, follow the tape, follow the capital flows you're seeing at the moment, and cut those losses very, very quickly in that situation. But what we're looking today is, can we break and close above 2,431? If it can, it kicks. I think this has got higher prices written all over it.